For the first time in 7 months, the South Korean stock market saw its sidecar activated as its benchmark index plunged over 6% during morning trade. Our Park Jun-han covers the action on the local bourse and on the forex market.
South Korea's benchmark KOSPI showed extreme volatility on Wednesday, with the index declining over 6% at one point during the morning. Amid the sharp decline, a sidecar was triggered, a measure that's activated when the KOSPI 200 futures index rises or falls by 5% or more for at least 1 minute. The sell-off mirrored an overnight decline in U.S. markets, where major indices, including the NASDAQ, fell over 2% as profit-taking hit technology stocks. Global tech stocks are showing volatility amid concerns that massive AI investments could lead to a bubble with limited real productivity. The index, however, recovered some of its losses during trading in the afternoon and closed at over 4,004 points, 2.85% lower than Tuesday's close.
Since September, South Korean stocks have been rising without much of a break, creating a sense of price fatigue and pressure. At the same time, U.S. tech stocks have shown increased volatility, and as a result, profit-taking moves occurred among some of the KOSPI stocks that had risen sharply, leading to today's larger decline.
Also on Wednesday, the dollar-won exchange rate hit a 7-month high, with the U.S. dollar closing around 1,450 Korean won. An expert says the U.S. central bank is signaling slower rate cuts, a key factor for Korea's foreign exchange market, given that the U.S. key interest rate remains higher than that of South Korea's.
As expectations for U.S. rate cuts have somewhat eased, while the U.S. economy remains solid, I think the market is reflecting that sentiment. Also, with rising volatility in risk assets like Bitcoin and stocks, investor preference for safer assets, such as the dollar, seems to have grown stronger.
Meanwhile, a securities strategist added that despite strong earnings and guidance, valuation pressures and concerns over an AI-driven bubble have weighed on investor sentiment, particularly among major tech stocks, adding to the volatility across global markets. Park Jun-han, Arirang News.